when we put it in a more international perspective, we see that actually across Europe investment volumes have risen. 2014 was 216 billion total investment volume in the whole of Europe. There was an increase of 35%. When we then look at the Dutch market, 2014 total investment volume was 10 billion. That nearly doubled compared to 2013 when total investment volume was 5 billion. Actually, since the crisis, we really saw that the market came back in 2013 with a volume of 5 billion. And in 2014, it really took off to a record high of 10 billion, which is, I think, the second highest volume ever recorded in the Dutch market.
I think there's an influx of capital looking to get exposure to real estate. It has something to do also with the returns you're getting on fixed income, for instance. Especially on our residential mortgages, we see huge interest for that, with a growth of 2.5 billion over the last 2 years. So people are searching for yield. Investors are looking for yield. On the real estate market, I think there's still very interest from investors, and it will continue for quite some time. It will be a trend for the next 2 to 3 years. Beyond that, who knows? Maybe my panelists will know that, but that's the short term. And maybe this year will be a better year even than last year.
Well, yeah, who knows? We certainly don't know where we're going to end up this year. But looking where we are with the market and what was the catalyst, I think if we compare it to, say, 12 to 18 months ago, you really saw that investors were looking for the core product in the Dutch market. That was the time when all the office buildings at the south axis were sold. And now they are moving up the risk curve. And if you look at the Dutch market, 2/3 of the total investment volume came from international investors last year, and 1/3 was only local. Main reason for that is I think that Holland is performing very well on a couple of items. I think we score good on GDP growth at the moment. We've seen 4 quarters of growth. Last quarter, 2.4% even. Expectations for the whole year is around 1.5%, 1.7%. So the economic fundamentals are strong. That combined with the still relative attractively priced real estate in the Dutch market compared to the UK, Paris, Germany, that itself presents an opportunity. And that's why all the investors have now the Dutch market on top of their lists. And it used to be only residential and offices. When I spoke to all the investors last year, nobody was interested in retail, but for this year, everybody is looking at retail. And I think that's a sector which we will see bouncing back this year in terms of investment volume.
Okay, good. Yeah.
I agree with Bart on the retail thing. That's quite a sudden change in attitude from investors. If you open up the dialogue maybe 2-3 years ago on retail, everyone was a bit scared about that. And today, retail looks like a perfect play for many of the investors on the core side, but also on the opportunistic side. So we're also very enthusiastic about retail, given the fact it's high street retail. If you want to really move up the risk curve with the risk you don't cash in on your risk premium, then maybe secondary cities, the secondary locations. But that's for the opportunistic ones in here.